what's up everybody? It's Omar. It is, I think, Thursday, right? September 3rd, 2020, 6:50 p.m. in the evening. And I want to make a quick video talking about two trades and two callouts that I had on Twitter yesterday. UNOE and CORT. So I'm going to pull up my Twitter. So this is my Twitter, Watchotrade. You can follow me there. I have a room that I'll just put the link in. This is the link. This is the actual room. You know, you come hang out with us, trade with us. I said, this is what happened. I said, UNOE caught it short at 455. If the ass breaks below 429, then it's lights out. We'll see, right? Because nobody knows what a stock is going to do, right? I'm just playing off the technical level, right? So the way I found UNOE was, this is my scanner. I have E-Trade Pro, and I caught this on the scanner, right? This started popping up around 151 yesterday. And, you know, so this is the momentum scanner that I use on E-Trade Pro. It's basically a replica of Trade Ideas. So I'll give you a tip. If you want to save the money and you don't want to spend $120 a month on Trade Ideas, subscribe to it for 1 month. Get E-Trade Pro, which I think you need a minimum of $500 in an account to have E-Trade Pro. It's free once you open the account. And then you just replicate the Trade Ideas scan in E-Trade Pro, and boom, voila, you don't need Trade Ideas. If that, you know, if that's what if you want a Momo scanner like I have, you know, it's really up to you, but it's basically a replica of that. All right, so there's a gem for you. So basically what happened was, when I saw it pop up right at 151, which is right in this candle here, okay, I immediately went to the daily, right? So here's the daily chart. Matter of fact, I'll just make this one big chart, that way make it easier, right? So I see here, the first thing I did was I clicked live news, and there was no news yesterday on it, right? So that's one actual aspect that's gonna make you think, oh yeah, this stock isn't gonna do shit, right? So the second thing that I looked at was the daily. So you always go to the daily and you want to see how the stock reacts. So this was a stock that previously ripped. So I'm gonna just clear all these lines so you can see. So this is a stock that, and again, I have this little indicator that the magenta line means that the stock is 3 times the relative volume, and the orange means it's 2 times the relative volume. And this is a gap up. So you can see gaps up. It's had some gap ups, but there was some times where it's closed weak, like this gapped up here and closed weak, and it just been dumping ever since. So it had this big run up back in June and then died, right? So what do? I go look at the daily, and I go look and I see the stock is spiking, right? And you can see that this was yesterday, so this is today, so we're not going to look at that. So I see example, so I'm going to say, okay, what's the resistance level? And when you zoom in, you see right here there's resistance right at that 448 level. All right, so I see that there's overhead resistance at that 448 level. Now what you need to know is this candle has 16 million volume in that day. So right, so 16.6 million shares was traded that day, and on this day it's only 9. So you know, it needs to have a lot more volume to break that and keep going, right? So what do you think? Trading is psychological, so you got to think this, right? If I'm a bag holder that was stuck here from the $4 when it dumped, what do you think they're gonna do when they see the stock spike into this level? They're all gonna panic sell. They're gonna be like, shit, now I can get my money back, let me get out, right? So this is what the short sellers do. This is what the guys that you follow on Twitter do, right? If they're smart, they look at these spikes, these artificial spikes that are probably chat room pumps or sympathy plays from other stocks in the sector, and they're looking to short. So when I saw that, I knew that, you know, this stock more than likely was gonna dump. So that's the first level that I mapped, was 448. Now you're saying, well, but Omar, where did you get? So I'm gonna pull up this. So what did I say? So I said CORT 455, right? If it breaks below 429, then lights out. Now why did I say 429? Okay, and this is where I'll add a second chart so I can pull up the 1 minute time frame. Let's do that. Let's just pull up the 1 day or 2 day 1 minute. Intraday, 2 day, 1 minute. All right, so this is what I'm thinking, right? So the stock is spiking, right? And remember, I really love to trade off the 5 minute. The 1 minute, I look at both, but the 5 minute gives me real levels. So when I saw it gapping, right, I caught it at this candle, right around this candle. I saw it spiking, and you see that wick, that means it's getting stuffed. It spiked, right? And you see the buyers and sellers are caught in that body, and then it spiked again, but it couldn't hold. And when you look at the time itself, it just started dumping. So into this dump, right? Into this dump, that's when I took it off, and that's when I went to short. So for me, when I'm looking on the 5-minute, right? Because this is all happening within the 5-minute time frame, right here. This is the level that I'm mapping. This is the key level. This is where everybody's stuck. So if it can't hold that, that's what I'm gonna risk. So in this candle, I went short. I went short. I got executed at 455, and the reason why I had said 429, if 429 breaks down, it's gonna dump. Now, one, again, I thought it was gonna dump because it had so many overhead bag holders. Two, there was no news on it. But three, the reason why 429 was so critical to me, because look on the gap ups, right? So this is these. I tell you, these are two. This is like my indicator, but just know that this means the price is going up. The solids mean that the price is going down. So right in this level, look right in here between. You see this right here, right? You see these two candles. So this is where it closes. You see where the body is. It wicks, but see all the people are stuck here, and then look at where all the buyers got in. They got in here. So right at this 428, and it's really technically. It was, if you want to be specific, it's really 428. I said 429. I'm doing this kind of fast. It was really 428. If you want to be specific, this is where everybody's caught. So what do you think is going to happen? If I went long here and the stock is dumping and I'm holding, thinking, all right, this can go back up. If I see the ask, right, and I'm looking at level 2 and I'm seeing the buyers and sellers, right, these are the people that are willing to pay a price, and these are the people trying to get, sell their shares. If this price drops below this, what the fuck you think you're gonna do? You're gonna panic and you're gonna sell. So once the ask broke below this, you see how you got the wick. So look, let's look at what happened, right? It breaks down, right? It gaps up, it pulls down, it spikes back to the 448, it comes back down again. And if look, when it spiked back up, it couldn't even hold above this. So you see, this is where all the buyers and sellers are stuck now. You see right in these two candles, right in this and this is a 5-minute time frame, remember guys. So I'm looking at this. Look at when it spiked up, it couldn't even hold above it. It got rejected. It went in and it wicked. That's why I like the 5-minute time frame, because it gives me a real indication of what's happening. All right, the one could be a little noisy, and you could have thought that this was gonna rip and you got dumped on. So look what happens. It spikes back up. I'm sorry guys. Yeah, I'm sorry. Let me double back. I'm messing up real quick. Okay, no, I'm right. It dumps, it spikes, and look what happens. Really quickly it spikes back up, it breaks down, and look what happened at 429. Look at this. It dumped right here. So right into this candle, this is the 5-minute, this is where it's spiking, it can't hold, and then right in here, boom, as soon as it broke that 429, it dumped. And look at this is where everybody's caught right now, and it just dumped, and it went down all the way to 383. And then look what happened, guys. It spikes again right at the 383, and look where it gets to. So what happened was, when the stock actually broke down here, I actually covered right into this candle. I think I got executed like, I don't know, it was like 392, 393. I got out because I was looking to get out right into this candle. I thought it was gonna, at least bounce somewhere in here, because this is where the buyers and sellers all got caught. So I figured it was gonna come somewhere here and then spike. And look where it spiked to. What was the high? 429, which is the original price, right? 429. All right, and why did it spike there? Because these were shorts like me covering, so it causes that artificial spike, and then more people are looking to get in on the spike, so it pops. Remember, you short into spikes and you buy into weakness. So when you want to buy a stock, you want to buy in weakness, like something like this off a support level, and you want to short into a spike that gets rejected over overhead resistance. That way you're close to as your risk as possible. And it spiked here, and because all these people got caught, they're more selling, so it dumped back again, and then it kind of popped, and then it dumped. And then the next day, let's see what happened the next day. So the next day, look at this. After hours, you got some of the spiking, and it dumped. It didn't even get that high. Look where it got to the next morning. It got a little pop up to this $4 level, right, which is like sort of right into this level here, between here and here. And if I would have been, let's say if this thing popped, I would have been shorting, kind of risking right here, like 408, 408 or 424, like somewhere up in that range. If it broke over 428, I might have started getting concerned, but that would have probably been my risk, and then it dumped. So that's why I knew UNOE was, the stock to go short. Now, hopefully that makes sense. So that technical analysis makes sense. Now let's talk about CORT. Man, I wanted to make this video shorter than what it was, but that's okay. All right, so now CORT, all right, this thing went nuts, and it has a habit of doing this where it goes crazy and then it dumps. So what did I say about CORT? I said a lot of sellers just got trapped in CORT at that 2102 level on the dump. If it reclaims it, shorts will get squeezed and retest higher day. If it rejects, it should dump back to 1961. All right, so why did I say 21? Okay, so let's not overthink this. All right, this is what, unfortunately, you guys pay for these rooms and they're not even teaching you none of this stuff. So this stock went from 12 to $23. That's insane move, right? I mean, just fucking ridiculous. Now, think of a rubber band. When a rubber band, you stretch it far enough, what it has to do? It has to retrace. The same thing happens with stocks. It just can't go up and up forever. Now, the reason why you've seen this stock go from 12 to 23 is because every time short sellers attempted to short the stock, they got squeezed. So they kept having to cover the shares, and it kept artificially driving the price of the stock up. And you see this is a flag pattern, and people probably started shorting because like somebody like me might have saw this, and honestly, I might have, if I see in the 5-minute time frame this getting stuck here and I'm up, damn, this shit is up so much, it's probably gonna, I might have shorted this breakdown here on that $17 level, just because it to me it's a good risk reward from the sake that it's up so much. And had I done that, I could have once it broke 1756, I might have gotten short here on that pop right there, and I could have gotten some some nice change, and probably I would have thought that more than likely it might have been done and maybe got squeezed if I was holding, but that would have been not a bad idea to short at that level. All right, but what happens is you got the second push, right? And you get the second push, and again you get the pullback. So gaps up and then it pulls back and everybody thinks it's over. Nope, squeezes shorts one last time. So we got that last squeeze. Now, why did I map that number, that 21 number? Okay, so when we look at the stock, right, it's gapping up, it pulls back, it gaps up, and here, this candle, look at this candle, look how big it is. There's a lot of people that got caught in this dump, meaning they chased up here, they bought it into this and they chased and they got caught in the stuff, and now they are underwater. So when you see it dump, look what happened. Right here is the body of the candle, right? So I'm mapping it right here, and it's technically so, and look right here 21. So you see how here it gaps up again, look, right? So it dumps at 21, spikes, I'm sorry, it dumps. This is the dump. This is the dump, and then it spikes, and people start chasing here. These dummies chase, and this is why the 1 minute, it to me is not always, you can't always go by the one, because you chasing this and you get caught in a dump. That's why you need the 5 minutes. So you need to see the candle close above, and I don't know if I said if the candle. When I say reclaims, so when I say a lot of short sellers got trapped in CORT 2102 on the dump, if it reclaims, what I mean by reclaim is I want to see the 5-minute candle close above this number, because that means that buyers are in and now it's off to the races. But these wicks it's not telling me shit, and that's why on a 1-minute time frame you can't believe it, and even on the 1-minute time frame it didn't even close above it. So a rookie would go buy into this. A smart person would not wait. They would want to see the candle close above it at least before they take that risk. So because of that, I knew that it was going to dump. Now, I said that it was heading towards 1961. I think it was 1961. And the reason why I got that number, or 1921, is because when it started dumping, this is where originally the buyers got caught. There was a lot of volume here. So I thought it was heading, but it actually got down as low as 1862. But look what happened, guys. The body of the candle never closed below it. So that's why you have to be careful when you're taking these trades. And you see the next candle here, it closed above it, and it was up, and then it dumped again. So that's why I was adamant about this. Now, if let's say we're not looking at today, if I'm mapping my levels, right, that's critical level. I'm looking at this level here. That's critical. And let's see how it reacts today. Let's see how it reacted today. So pre-market, this is what's happening pre-market today. And then look what happens. The stock spikes. Let's zoom out. It spikes and it gets rejected into this level. Now I'm going to zoom in and look. This is also a critical level because this is where a lot of buyers in. Look at that candle that got caught in here. So if I was going to short this, I would be risking, that would be the perfect area to risk. And I would have had that 2176 map. I had 21 map, but 2176 is important because look at that huge candle. And look at where it got stuffed. Look at where all these people, you know, if they don't see it get back up there, they're gonna try to get out as close to it as possible because they're scared. And look what happens. It dumps, it grabs up and it dumps. And that's and so you could have took a short risk off that spike. And what I do is, like, let's say I see a spike like this and I want to get in. I see that the body of the 5 minutes here. I'm just looking to see it break below here to see that's backside move. So when I zoom, let me go to the 1 minute here. Let me zoom in. So you see, I'm looking, waiting, and I'm watching, and I'm seeing it's not closing above here, so it's gonna give me my entry soon. You got that little wick here, and then you got the wick here, and now this pop, I'm in short. And I'm risking off that. And that's what I'm do, guys. And then all you do to figure out, okay, where should you cover? You just want to look. You want to look left, right? And you want to see, okay, where the buyer stuck. So if I'm looking at this, my first area to cover would have been right here, right in this candle, because this is where a lot of buyers stepped in. All right, so I'd be very, you know, cautious in this level to cover into this. But it actually couldn't hold it, and it dumped, and this would have been the second area that I would have been looking to cover, right in this top of this candle. And look, it got to this area and it bounced up. Why? Because that's where the buyers were. All right, it's a lot of support. It's a lot of support in that level. Okay, and that's why it gapped up. And that's all trading is, guys. It's buyers and sellers. Where are the buyers and where are the sellers? That's the shit that Tim Sykes don't teach you, or your trading doesn't teach you. A lot of your favorite gurus that you're giving $200-300 a month. You do the same thing with any stock. You could do this with Tesla. You can do this with Apple. You can do this with large caps. You could play the same momentum on large caps and small caps. Look, just really quickly before I end the video, I look at Tesla, right? So if I was going to short Tesla or buy puts, right? Because Tesla, I'm trading options. I'm seeing, see, here's the body in the first 5 minutes. This is where people are stuck. And then this is where people are stuck here. I'm looking to see, once it gaps up here and it spikes, is it going to hold? And if it's not going to hold, I'm going to short on a rejection of this. And guess what? If it like pulls back and then rips, then I know I stop out. I know what my risk was. But if it doesn't, you know, I can hold through this. And look at where it bounces. It bounced originally on the dump where? Right where the buyer stepped in. So you could have took this long. And believe it or not, with options, you could take a quick scalp long, and you're getting, with Tesla, you're getting 4 or 5 points. You can make a nice chunk of money. But really, you want to be on the right side of the trade. So if this is spiking and you want to see if the trend is still downward, you're looking, okay, so I would be like, all right, this is kind of where, you know, the people got stuck. So let's see if it breaks above it. So when it spikes, it doesn't break above this. This is telling me that the trend is still downward, and you can take it down. And you can risk off that. That's it, guys. So if you're spiking, you don't want to buy puts or short into this. You want to wait till you see a pop into the level and then determine where you want to go from there. If it doesn't get back up here, stay away. You don't want to chase, because that's how you're going to lose your money. All right. So I hope you found this helpful. Like, subscribe, and share. Let me know what you think, guys. I'll put the link to the room. You can come join. I should be in there tomorrow trading. I just traded one stock today, quick little scalp. I made shit that it's not even worth posting. So that's it. All right, hope everybody's well. Later.